Howdy, y'all. Welcome back. This is the economic update for July 19th, 2021. I am your humble host, Raymond Dahlman, and I hope everyone had a terrific weekend. It was kind of a cruddy weekend if you're an Astros fan. They lost 2 of 3 up in Chicago to the hated White Sox. But, it's a new day, and they're back home in Houston, and we'll be playing the Indians for 3 games. So that is exciting. And they're still in first place, so certainly not the end of the world. But hope everyone had, like I said, a great weekend. It was very nice here in Colorado, getting ready for a trip to a conference. So I will be out of town. So if anybody needs me, I will stay on my computer and phone. But maybe a slight delay in getting back to you. But I'll definitely get back to folks prior to the end of the business day. So. But I think that's, let's go ahead and jump into what's going on in the world, the weekly economic update. Let's see, the week on Wall Street. Despite a good start to earnings season and some solid economic data, worries of slower second-half economic growth led to a pullback in stock prices last week. The Dow Jones fell 0.52, the S&P 500 lost 0.97, the Nasdaq sank 1.87, and international was flat at negative 0.06. Stocks weakened amid an active week of news, including 2 important inflation reports, congressional testimony from Fed Chair Jerome Powell, a string of economic reports, and the start of the second quarter earnings season. The earnings season began with a strong note as 95% of the first S&P 500 constituent companies to report checked in with earnings above estimates by an average of 22%. Despite above average earnings, stocks moved little on the results. Bond yields continued to trend lower amid Powell's testimony that the monetary policy would remain unchanged. A decline in consumer sentiment. Fed worries. God, who wrote this? My ghostwriter should be fired. A decline in consumer sentiment. Fed worries of economic slowdown, leading stocks lower and cementing losses for the week. Hot inflation. The CPI jumped 5.4% in June, representing the biggest monthly gain since August of 2008. The core CPI, which excludes food and energy, increased 4.5%, was the fastest pace since September of 1991. That was my my senior year of high school. I was just starting, so kind of a long time ago, 30 years. The CPI report was followed by the Producer Price Index, which surged 7.3% from a year earlier, outpacing May's jump of 6.6%. Higher wholesale prices were primarily attributed to increased commodity prices and labor costs. Chairman Powell, in congressional testimony subsequent to these reports, reiterated his position that the accelerated inflation of recent months will be temporary. Sure it will. Do you believe him? I don't. All right, some economic data coming out this week. Tomorrow we have housing starts, Thursday's jobless claims, existing home sales, and index of leading economic indicators. Friday is the Purchase Managers Index Composite Flash. We have a bunch of companies reporting earnings this week. Today was IBM, JB Hunt Transport, and Prologis. Tomorrow will be Netflix, HCA Healthcare, and Chipotle. Wednesday will be Verizon, J&J, Coke, United Airlines, Texas Instruments, CSX, and Novartis. Thursday, AT&T, Intel, Twitter, Snap, Abbott Laboratories, American Airlines, Southwest Airlines, Union Pacific, Freeport McMoran, and D.R. Horton. And wrapping up the week, Amex, Honeywell, Next Era Energy, and Kimberly-Clark. And let's take a look here. As far as the indexes for the year, looks like the S&P 500 is still, running best, followed closely by the Dow Jones. The Nasdaq is coming up third, and international is coming in at 7.66%. The 10-year Treasury dropped 6 basis points last week, down to 1.31. Still on the year, it's still up 0.38. So, yields had risen dramatically over the last year, and they have been coming back down. So, we'll see, how long those trends continue. All right, 2 white papers going out this week. The first one is called Billionaires in Space. This is just talking about Richard Branson and Jeff Bezos and their playing with their very expensive toys, going up to I guess in Richard Branson's case, he went to near space, and Bezos will be going to outer space. I'm not sure where the where the cutoffs are. So, I mean, I really like this, quite honestly. I know Elon's been doing a lot of work with SpaceX, and then, of course, you got these two companies. I think it's fantastic. I'd like to see more private sector innovation because when you leave this stuff up to the government, I mean, they don't do anything well. I imagine NASA is just the post office with rockets. I mean, as often as I get the wrong mail, it's really no surprise that when you have the government in charge of things, it's just, I mean, and I'm not crapping on the government just because I hate the government. I served in the Navy for 4 years. I know how terrible it is as far as getting stuff done, and the bureaucracy and the red tape, and just the you got all these people who've been in for 20 plus years who are just sitting on their ass doing nothing. You could probably fire all those people and have more worker bees, but that's just the way the military does it. All right, second one, we have a white paper that's title is a 6.1% bump in Social Security. A few months back, they had talked about, they being those in Washington who write the laws, that they were considering a 4.7% increase in cost of living adjustment for Social Security. Now they're floating out a 6.1 for 2022. I mean, I guess it's good for those who are on fixed incomes, but I mean, it's like, where's this money coming from? I mean, I guess the Fed is just going to print some more, and that's how we're going to continue to pay our seniors. But I just see this as being very, very dangerous. All right, moving on. I had one article I wanted to share. It came from the non-satirical site, Not the Bee, which is the opposite of the Babylon Bee's satirical site. The title of this article is Fed Chairman Says Any Reduction in Money Printing Still a Ways Off, as he targets employment equity among racial and ethnic groups. Just want to read a couple of bits here. Let's see. All right. At our June meeting, the committee discussed the economy's progress towards our goals since we adopted our asset. This is Powell speaking. The economy's progress towards our goals since we adopted our asset purchasing guidance last December, while reaching the standard of substantial further progress is still a ways off. Participants expect the progress will continue. We will continue these discussions in coming meetings. As we have said, we will provide advance notice before announcing any decisions to make changes to our purchases. That's a lot of words. It doesn't really say much. The Fed has also pledged to keep buying at least $80 billion a month of Treasury securities and $40 billion a month of agency mortgage-backed securities until substantial further progress has been made toward the committee's maximum employment and price stability goals. As discussed in the Monetary Policy Report, the pandemic-induced declines in employment last year were largest for workers in the lower wages and for African Americans and Hispanics. Despite substantial improvements for all racial and ethnic groups, the hardest hit groups still have the most ground left to regain. Well, I don't doubt that, but I've also heard a lot of scuttlebutt through the TV, and from just being out and about, it's hard to get the lower end jobs filled, and primarily because of unemployed folks receiving government benefits that are as good, or if not better, than the wages that are being offered out in the private sector. So, when you're bribing people not to work, that's going to be a problem if you're hoping to get everybody back into a working position. So, U.S. inflation is highest in 13 years as prices surged 5%. Consumer prices continued to rise rapidly in May as economic recovery picked up, reflecting a surge in demand along with shortages of labor and materials. Strange. All right. Well, this next section, they talk about the Weimar Republic with Germany. And so here's how it starts out. Historians agree that the origins of Germany's post-war inflation lay in the failure of the country's political classes to make hard choices, kind of like right now. The Germans had funded their war effort largely with debt accompanied by printing of central bank money. kind of like what we've been doing for the last 20 or 30 years with our wars in Iraq and Afghanistan and the blockades of Yemen and all the little skirmishes we seem to get ourselves into. How many trillions have been wasted in the Middle East for our friends, the Israelis. Hope it was worth it. So, continuing. After the Weimar Republic was established in 1918, inflationary finance continued. Government deficits funded with newly printed marks had the advantage of maintaining employment at high levels and keeping the economy buzzing. As inflation soared, enterprises were able to borrow from the Reichsbank at rates so low that capital was, in effect, free. So who supported these policies? Reasonable people. This policy had the support of many seemingly reasonable people. Walter Rathenau, the cultural head of electronics firm AEG and future foreign minister, suggested that in January 1921, that should the economy turn down, we ought to print money a bit faster and start construction works using employment to create as a dam against the depression. It is incorrect when people said that printing money was bringing us ruin. Well, we saw that turned out to be a lie. And again, it's what we're trying to do here in the United States now. Let's create lots of federal jobs and just print up money and pump it out to the general public. And supposedly there's this multiplier effect when you do that. I've yet to ever see that, but I'm just a lowly financial advisor here in Colorado, so no one asks me for my opinions. But I would say that if those of us who've studied history and have even a mild understanding of the economic cycle knows that this is going to lead to some really bad shit. So, all right. Well, that is everything that I had today. Pretty quick. Didn't want to take up too much time. So hopefully everyone has a terrific week. Go out, get some sun, get some exercise, have some fun. Go do some things. Don't sit around in the house and watch the fools on CNN who are full of BS and it's weird. It's like living in two different countries. It's like one half thinks that watches CNN thinks that Donald Trump is this Russian spy and that there's these insurrectionists all over the country that want to burn down everything, and the ones who invaded the Capitol on January 6th without weapons, mind you. They were trying to take over the Capitol without any weapons, which I find funny. Maybe a few sticks. And then on the other side, you got the Trump tards who think Q is going to save the world and Trump's going to be reinstalled in August. So it's hilarious from my point of view. I'm just going to sit back here in the mountains and watch the world burn. And then once it's all sorted out, I'll come down from my perch and hopefully find a few smart folks who are willing to put society back together. So, anyways, all right. Well, I hope everyone has a fantastic week. Like I said, I'm going to be out of town the rest of the week. We'll have a video on Friday. Might go up late. Not sure. Just depends on what the schedule's like. And but like I said, if you need me for anything, just shoot me an email or give me a call. I'll be checking messages and staying on top of things while I'm in conference. So, but like I said, if you need me, give me a call. Otherwise, I'll see everyone on Friday. Have a good one. Bye.